Hello and welcome to Practice Assessment 1 of Bookkeeping Controls AAT Level 2. We've already done tasks 1 to 4 in the previous video, and I think it's working well in terms of showing how I go about it and in terms of exam technique really. This, especially in the next two tasks which we're going to do, I'll do 5 and 6 in this video, is very much about exam technique, and will really improve how you score in the exams. So there are these accounts in the purchase ledger. It says in task 5, there's 4 accounts there. What's the total balances in the purchase ledger on the 1st of September? Now, I set this up in a particular way because we're going to, we need this for the lesson later in the question. So you're going to do a normal T account, and you're going to put in your balances. So there's the 3 credit balances and the 1 debit balance in your T account. Now I like to make this absolutely foolproof. So what I then do is I add up all of these, both sides, work out what the difference, and that's my carry down. I brought down there. I re-add them up again just to make sure that I'm absolutely correct. There though, and that's a 100% method of never getting that figure wrong. So answer to A is 16231. Then we've got our purchase ledger reconciliation over here. So here's the purchase ledger figure here. There's the purchase ledger control account figure there. What's the difference between the two? 585. Okay, now I did that with a bit of extra length to that question. You might have just gone, oh right, let's just take those 3 figures minus that one is the answer, and that there would be the answer there. But when we got to the question C, this method is going to hold up way better than the other one. So what we do then to get the 2 reasons, or which are the 2 reasons, we have our purchase ledger T account here, and have our brought down figure there. And we're going to continue on with our T account here. Then we've got our create another T account for the purchase ledger control account, and put our brought down figure in there. Then what we're going to do is we're going to reverse out the journals that are said in each of the reasons. And after we've reversed them out, we're going to see if this purchase ledger control account agrees to the purchase ledger. If it does, that will be the right answer. If it doesn't, then it will be the wrong. So let's go through. Goods bought were entered twice in the supplier's account in the purchase ledger. So there'll be twice in here. So goods bought. So that would be a credit. So we're going to reverse it the opposite. Reversing out would be 2 lots of 585 in here, and 1 lot of reversing over here. And we can now see that our carry downs are the same after reversing it out. So A is one of the reasons. Let's now do B. Goods returned were not entered in the purchase ledger control account. So they were entered in the purchase, no, they weren't entered here, so there's nothing to reverse out here. But goods returned were entered in the purchase ledger account. So they would have been, goods returned would have been entered as a debit, so we would reverse it, so we would enter it as a credit. Put that in. They don't balance, so that is not the right answer. Goods returned were entered twice in the supplier's account in the purchase ledger, which means there'd be once in the purchase control account. So goods returned would be a debit, so we would put a credit in there, reversing out, and we put 2 credits in here. And we can see they don't balance, so that's not the answer. Discounts received were not entered in the purchase ledger control account. So they were entered in the discounts received, which would be a debit, so they would be entered in the purchase ledger control purchase ledger, so we'll reverse that out. And they were not entered in the purchase ledger control account, so there's nothing to reverse out there. They are not the same, so that's not the answer. A bank payment to the supplier was entered into the wrong supplier's account in the purchase ledger. So all we would do there, well, there's nothing well, let's reverse it out. And let's reverse it out of here. They're not the same, so that's not the answer. A bank payment to the supplier was entered twice in the purchase ledger control account. So let's reverse it out in here. It was entered twice. Bank payment, so that would be debit. So we would have 2 credits. Bank payment to the supplier was entered twice in the purchase ledger control account. So we would have To reverse that out then, you would have to put in 2 credits and 1 credit over here, and they're the same. So it is A and F. Now, why did this method work way better than anything else? What I tend to see is people tend to sort of produce this and then they look at it whilst looking at the answers and try and think it out in their head. And you can see there, I didn't think. I just simply reversed out the journals and then looked at whether it balanced up. And it was pretty much foolproof, really. There was no real sort of thought going about it. You just do the T accounts and you just put them in, and that was that really. So that is the much easier and foolproof method. And what you'll see in all my videos, really, I just sort of adjust all of this to make it quite foolproof. Right, so let's now do D. So this is a summary of the transactions with credit customers during September. Record these in a sales ledger control account show the balance carried down. Okay, so let's just go into here, create a T account. And we got a T account here. Right. So they're with credit customers. Okay, so they're customers, so they'll be debtors. So the balance brought down is going to be 25,614. Money owing to us, so it's an asset, so it'll be a debit. Goods sold, so they will owe us more, so our asset will be going up. So that will be 385. And what will that be? That will be sales, will it? Okay, bank payments received. So debit bank would be credit sales ledger control account. So bank payment received, and what we got is what are our options here? Would be bank. Okay, bank, and that will be 19,317. And goods returned. Goods returned by our customers, so that will be goods returned. So what we got, sales returns. And that's going to be 2065. Okay. And then show the balance carried down. Now, on a separate piece of paper, I would do this. And then I'd enter it in without the extra step that I put in here. So that is the carried down. So that'll be the balance carried down and the balance. Yep, and that is it there. And then our totals would be those figures there. So if I now take this out here, delete it. Oh, sorry, let's just go on and do that. Sorry, so 18,617. Yeah, I'm going to take that out there, and I'm going to add that up again. That's how it would look. Okay, so that's the answer for purchase controls. It will be the same for the sales ledger control reconciliations as well. But the key thing was the exam technique that was used, really, of using the T accounts, creating the T accounts for both the purchase ledger and the purchase ledger control account, and then reversing the journals, which made that answer C, more just methodical, really. Right. So what we're now going to do then is we've got question 6 in here. So what I've got then is I've got this bank statement over here, and I've got this cash book here, and I've got to produce a, let's say, what have I got to do? Check the bank statement against the cash book and enter any transactions into the cash book as needed. Okay, the cash book balance carried down at the 30th of June and brought down at the 1st of July. A little bit of a boring question, really. We could add on the bank reconciliations there. So what we're going to do then is we'll use the 4-step method to bank reconciliations. So, and what I'm going to do here is I am going to use colour. You might like this as a method. I'll give you a video when I use I sort of put lines through, but you might also like to do this with highlight pens. So here we go. Now we're going to remember this. This is our cash book over here. This is from the company's perspective, and this is our bank statement here, and this is from the bank's perspective. So they're the opposite way around. So a debit in here is going to be a credit over here. So let's start colouring this up. So that one's that one there, and that one is that one there. Okay, that one is that one there. I see what I do. Okay, and we haven't got one of there. So that would be an unpresented check at some point down the track. That's not in there. 592. Oh, we've got the 235. Yeah, got that one. I've got that one as well. Okay. Nothing else in there. No, right, let's start going on these ones. That one. So this is step 1. Whatever's in our bank statement, we tick off in our cash book. That will be step 1. Okay. Step 2, we reconcile the brought forward figures. Now I always put step 2 after step 1 because it chops down the number of options if these figures were different. These brought forward figures were different in here, and then if there was, let's say it's a combination of various things, it makes it easier. In real life you actually do step 2 before step 1. You reconcile, or you tick off your items in the brought forward bank reconciliation, but that wouldn't be much of a question if the examiner was giving you the answer of the previous month that you can just go and copy in this month. So let's do that, and let's change the colour here. So those are the same, so we're happy with that. Right, so now anything that's not in the cash book, not in the cash book, that's on the bank statement, is something that has to be put into our bank statement. So anything that's not in this thing here, which is going to be these items here, are not in our cash book. I don't think I can see any of them. They're just checking. No. Okay. So these ones here, all of that there, have all got to go into this cash book. So it would be that and that. That's what that is there, and that and that go into our cash book. Okay. Right. Now let's redo this here. In terms of our, so sorry, what we also need to do as well, let's just insert a little, shift those cells down. So that would be our that's our brought down into this adjusted cash book. So this is step 3 now, adjust the cash book. So step 1, the yellows, step 2, the blue, step 3, let's do this one's here. So let's do how I like to do my T accounts. Do that and copy that over there. So let's add up this side as well. Here, the difference is that minus that. So that's our new carried down. Okay, so that would be the cash book balance carried down at the 30th of June and brought down. And let's just add this up again. Totals and brought down. Yeah, so that's our new carry down and brought down in here. Okay, so hopefully that makes a lot more sense. So now what I'm going to do here is I am going to give you the last method, and let's see whether this thing actually reconciles as well. So we'll do the last bit then, though, is what is in our, so now we've got these ones in here. Let's put these brown ones there. Let's just colour that. So that was step 1, the yellow. Step 2, the blue. Step 3, adjust the cash book, our browns. Let's now then have our outstanding, well, let's do the presented checks first. So we've got that one there, and we've got that one there. Okay. Sorry, that is less unpresented checks. So we delete off our unpresented text, and we add on our outstanding lodgements. Okay, so we're going to do, let's just minus that. So we minus our those ones there, and then let's put in our outstanding lodgements. We add those on to our bank statement figure here. Okay, and we add all of that up there. And actually, here's our cash book. He didn't ask us to do a bank reconciliation, but we could, if we felt like it, just test whether we actually added up or not. So there we go. So to get from our bank statement figure in here, well, the unpresented checks, they are in the cash book as minus figures, but they're not in the bank statement. And then so we'll be taking that off the bank statement. These are things that should really hit in there, but haven't because of time differences. The outstanding lodgements are in the cash book, but they're not in the bank statement yet. So we would add those on, and then we would check whether that minus that plus that is equal to the cash book. So those ones there, let's give these another colour. Here, ooh, let's go for green. Are those items there? And that is the 4-stage method of doing a bank reconciliation. Firstly, the yellows, ticking them off, what they're same in each. Then the blues, reconciling the brought forward figures. And then now, a bit of an easy question this. There could have been some more where there have been like an item in here. Let's say the difference between those two was that or something, and you then take that off. That would be one of the blues between them as well. Then we did the stage 3, which was our we readjust the cash book. So we put in what's in the bank statement that's effectively missing from the cash book. So these things here that are missing from the cash book, redo our cash book, got to our new cash book carry down figure, which was that. Then what we do is we then do the bank reconciliation itself. So we go whatever's in the bank statement. The unpresented checks will be in the cash book and not in the bank statement, so we have to take those off the bank statement figure. The outstanding lodgements would be in the cash book but not in the bank statement figure. Yeah, so we add those on, and we see then if that minus that plus that, so bank statement minus unpresented checks, add outstanding lodgements is equal to the cash book figure. In here it did, and it reconciled. No greater feeling in the world for an accountant than things reconciling, and so that is task. Yeah, so that is tasks 5 and 6 all done. There we are. What more could one ask for? I think let's just check as well. Did I put those? Yes, I put those in. You'd fill in the extra little bits in there in terms of the names and what have you, but generally that's it and that's done. Hopefully, well, what have we got left to do now? We've got tasks 7, 8 and 9, which we'll do, 7, 8, 9 and 10, so we'll do those in some additional videos. Hope that was useful. Thanks for listening. Bye bye.